Welcome to the Deep Dive, your shortcut to staying genuinely well-informed. We cut through the noise, bringing you the critical insights from sources you care about.
Good to be here.
Today, we're zeroing in on a company that's, well, it's been making some big waves, generating some truly eye-popping returns, actually.
Even in a really crowded market, the financial space.
Exactly. It's a compelling example of how innovation, when you couple it with a strategic vision, it can really carve out a unique space.
And challenge those established players.
Yeah, absolutely. Our subject today is SoFi Technologies, ticker NASDAQ.
Yeah.
SoFi. Now, you've been keeping an eye on market performance. You'll probably have noticed SoFi's shares have absolutely rocketed. I think it's 68% this year alone. That's as of September 4th, 2025.
Yeah, that's huge. And to put that in perspective, it's significantly outpacing both the S&P 500 and the NASDAQ composite.
It really is.
And, for many people tracking market trends, SoFi is a name that often pops up in discussions around, say, Cathie Wood's investment philosophy.
Ah, yes, the Cathie Wood connection.
She's known for actively seeking opportunities right at that intersection of, well, high speculation and disruptive innovation.
That's right. So unlike a lot of investors who might lean towards those, traditionally stable, predictable blue chip stocks,
Yeah, the safer bets.
Wood tends to gravitate towards companies that, okay, yes, they carry a higher risk profile, no doubt.
Sure.
But they also offer that potential for what she calls multi-bagger returns.
Right, the home runs. For those maybe unfamiliar, we're talking about a stock that could potentially go up, 2, 5, maybe even 10 times its initial value.
Exactly. And SoFi, in her view, seemed to fit right into that mold. It's a fast-growing neobank, essentially a digital-first bank, built on modern tech, no branches.
Right, none of that legacy overhead.
And it's really reshaping how consumers, especially younger ones, interact with their money.
And understanding that strategic context is, I think, really vital here. We're not just looking at a stock chart in isolation. We're examining a company with a very distinct, kind of ambitious approach in financial services. They're aiming to redefine what a financial institution can even be.
So our mission today, for you, our listener, is to unpack what specific catalysts could send shares of SoFi even higher, and maybe sooner than many investors might expect.
We'll dig into the key drivers, yeah. Explore that core investment thesis.
And importantly, address some of the common concerns that analysts and investors often bring up.
Definitely need to cover those.
Consider this deep dive your efficient path, your shortcut, to being truly well-informed on this particular stock and the fascinating business model behind it all. Ready to dig in?
Let's do it.
Okay, let's start by maybe establishing a clear picture of SoFi's current state, because understanding its solid foundation is pretty crucial before we explore its, growth potential.
Absolutely. This isn't just a speculative bet based on hope.
Right. The company consistently generates robust revenue and, importantly, consistent profits. And this is while navigating an incredibly intense competitive landscape.
It really is fierce out there. And that kind of resilience, that profitability, that's what truly sets the stage for potential future gains, those monster gains you mentioned earlier. So just for context, as of September 4, 2025, SoFi's current share price is sitting at $25.36. That gives it a pretty substantial market cap of $30 billion.
$30 billion, wow.
Yeah. And that profitability you mentioned, amidst all that competition, it isn't just a fluke, right? It's really a testament to their integrated financial model.
How so? What does that model let them do?
Well, it allows them to acquire customers more efficiently, for one, and then, crucially, deepen the engagement once they have them. They're driving profitability through, sophisticated cross-selling strategies.
Okay.
And importantly, by maintaining lower customer acquisition costs compared to a lot of the legacy financial players, they've really built a business designed to grow and sustain itself.
Which brings us nicely to our first major potential catalyst.
Yeah.
This one's more macroeconomic. The Federal Reserve and the path of interest rates.
Right, the big picture stuff.
Now, at first glance, for many people, the immediate thought might be, wait, lower interest rates. Doesn't that sound like a headwind for a company like SoFi?
Yeah, that's the common logic.
Because compressed net interest margins, the difference between what a bank earns on its loans and what it pays out on deposits that can certainly pressure its lending operations, That's the standard view, right?
That is indeed a common and frankly logical initial thought. But it's really only half the narrative. It often misses a critical nuance with SoFi specifically.
Okay, so what's the other half?
Well, if you look back at their history, SoFi's revenue growth and its profitability have actually stayed remarkably resilient, even during previous periods when the Fed cut the federal funds rate.
Really?
Yeah, it kind of challenges that immediate assumption that lower rates automatically spell trouble for them.
Okay, that's genuinely counterintuitive for a lot of us thinking about bank stocks. So if it's not necessarily a headwind, how does SoFi manage to turn that into a tailwind? What's the mechanism that makes lower borrowing costs actually a benefit?
It's a great question, and it really highlights SoFi's unique position in the market. While yes, lower rates do compress those net interest margins to some extent, they also unlock a substantial amount of pent-up demand, especially for refinancing. Think about student loans and mortgages. These are segments where SoFi has a very strong presence and sees a lot of activity.
Oh, okay, so people waiting for rates to drop to refinance.
Exactly. Think of all those individuals, those families who've been holding off, waiting for a better rate to maybe consolidate high-interest student debt or get a more affordable mortgage.
Yeah.
Lower rates act as this powerful incentive, basically pulling them back into the market.
And SoFi is set up pretty well to capitalize on that surge in demand, aren't they? I mean, their ability to merge consumer engagement, their tech platform, and that whole suite of financial services under one roof. That seems like an advantage.
A distinct advantage, absolutely, over more traditional lenders, definitely. The bigger implication here is that falling interest rates could really reinvigorate SoFi's lending segment quite vigorously.
All right.
But, and this is the crucial part, it also significantly expands those cross-selling opportunities across their entire ecosystem.
Right, the flywheel effect you mentioned.
Precisely. So when a customer comes in looking for, say, a student loan refinance because rates are attractive,
Yeah.
SoFi then has this prime opportunity to introduce them to their investment platform, SoFi Invest, or their SoFi Money banking accounts, maybe even their insurance products.
So lower rates don't just bring people in for one thing.
Exactly. They open the door for SoFi to offer them a much wider range of integrated financial solutions. It feeds the whole ecosystem.
And just to underscore how relevant this is now, Federal Reserve Chairman Jerome Powell recently hinted another rate reduction could come as soon as next month. That's October 2025.
Yeah, so this isn't some far-off theoretical thing. It could be a very near-term positive shift for the company.
Okay, so beyond these big macro shifts, SoFi is also making its own strategic moves, right? Moves that could fuel growth. And that brings us to our second catalyst. This one feels pretty exciting for a tech-first company like them. Their re-entrance into cryptocurrency investing.
Yeah, this is interesting. It's a move that seems specifically designed to tap into a very distinct and frankly crucial demographic for them.
Which demographic is that?
Well, SoFi's core user base, pretty much by design, it skews younger. They have very strong adoption among millennials and Gen Z.
Okay.
And this demographic insight is critical, especially when you look at, say, a recent survey from Motley Fool Money. It found that younger investors are just significantly more likely to invest in crypto compared to older generations, like Gen X or baby boomers.
So for SoFi, getting back into crypto isn't just adding another feature.
No, not at all. It's more like a natural, almost expected fit for their existing users and the ones they want to attract. It aligns with their user base's interests.
That sounds like a pretty substantial competitive advantage, especially in the crowded fintech space, wouldn't you say?
I think so. With crypto investing now returning to the SoFi platform, the company has a much clearer, more direct path to compete head-to-head with other tech-driven financial apps. Apps that are already super popular with this younger demographic, like Robinhood Market.
Right, levels the playing field a bit more?
Yeah, and it goes beyond just competing for existing users. This move also presents a really powerful channel for new user acquisition.
How so?
Well, it's not just about keeping their current users happy. It could potentially attract an entirely new group of people, individuals who prefer the convenience of trading crypto directly through an integrated platform.
You mean where their banking, investing, lending is all in one place?
Exactly. Rather than having to rely on, say, standalone exchanges like Coinbase Global, that consolidation of financial services, that whole everything-in-one-app approach is incredibly appealing to this demographic. They value simplicity and integration.
Okay, makes sense. All right, let's address what is often the elephant in the room for many investors when we talk about high-growth companies like SoFi.
Ah, yes. Valuation.
The question of valuation. Because the strongest bear case against SoFi almost always centers on just how pricey the stock seems, particularly if you use traditional metrics.
You're absolutely right. By conventional banking benchmarks, yeah, the stock is undeniably expensive.
How would we see that?
Well, if you look at charts like the SoFi price to sales ratio, that's the PS ratio, market cap divided by total revenue,
Right.
you'll clearly see it trades at multiples that suggest more of a technology premium.
Not like a regular bank.
No. This valuation method places a much greater emphasis on growth potential, on future revenue streams, rather than just looking at traditional price to earnings or price to book ratios that, legacy banks typically trade on.
And that difference is where the skepticism comes in.
Precisely. That difference in valuation approach is exactly where many traditional investors might pause or even just outright dismiss the stock as overvalued.
But the core investment thesis here, the sort of counter-argument, is that SoFi's valuation really needs to be considered through a different lens, through the lens of exceptional growth potential and its inherent optionality.
That's the bull case, yeah. You're suggesting this isn't just another digital bank we're looking at.
Is that fair? Is it really more than a bank?
I think it raises a fundamental point about how we categorize and value companies today, especially in finance. SoFi is, I'd argue, far more than just a digital bank in that conventional sense.
Okay.
It's really an integrated financial ecosystem.
Yeah.
It comprehensively spans lending, investing, banking, insurance. They even have a technology platform, Galileo, that serves other financial institutions. So it offers a much broader and potentially more resilient value proposition than just a siloed lender or a simple neobank app.
And this integrated approach, that's what leads to this concept of the flywheel effect we sometimes hear about with their strategy.
Yeah.
Can you sort of paint a picture of how that works in practice?
Yeah, the flywheel effect is really the secret sauce, potentially. Imagine, say, a new graduate. They might initially come to SoFi for an attractive student loan refinance offer.
Okay, makes sense.
As they experience SoFi's platform, maybe they find it user-friendly, efficient. They might then decide to open a SoFi money account for their daily banking. From there, it's a pretty seamless step to maybe moving their investment portfolio over to SoFi Invest, or even exploring SoFi's insurance offerings if they're competitive.
So each new product pulls them deeper in.
Exactly. Each new product they adopt doesn't just broaden SoFi's total addressable market, their TAM. It deeply enhances that customer engagement, it fosters loyalty, and ultimately it drives a higher lifetime value for each user.
Creating that self-reinforcing loop.
That's the flywheel. Satisfied customers use more products, they might recommend SoFi to friends, attracting more users who then in turn use more products. It's a cycle.
And that's hard for traditional banks to copy.
It's a crucial distinction. Legacy incumbent banks, often constrained by their, fragmented systems, different departments barely talking to each other, they struggle immensely to replicate that kind of seamless, integrated experience.
So bringing it all together then, what does this mean for the long-term investor looking at that valuation? Are we saying this premium isn't just, market hype?
I think that's the argument. Investors are often willing, and rationally so, to pay a premium for companies that exhibit a powerful combination of qualities. Profitability, which SoFi now has, strong growth, which they clearly demonstrate, and an active strategy of expanding into new related markets, adding new products, new services. Those are really the three qualities that genuinely position a business for sustained long-term success. And, SoFi arguably checks each of these boxes.
So the valuation reflects a strategy and potential.
Exactly. Its current premium valuation isn't necessarily a reflection of just fleeting market excitement or hype. It's arguably a reflection of the company's strategic position as this multi-product platform that is still very much in the, let's say, early innings of its growth story.
It's about investing in potential that's already showing tangible results.
Precisely.
Okay, so to recap our deep dive today then, we've covered SoFi's strong current performance, its robust, resilient profitability, the essential solid foundation. We've explored two potentially powerful catalysts for future growth. First, the potential for interest rate cuts to reinvigorate its core lending business and really expand those cross-selling opportunities across the whole ecosystem.
Right, the rate tailwind.
And second, its strategic re-entry into cryptocurrency investing, specifically designed to attract and deepen engagement with its core younger demographic.
Tapping into their user base, yeah.
And finally, we've addressed that pricey valuation argument head-on, framing SoFi not just as a traditional bank, but as an integrated financial ecosystem with substantial growth and optionality that might justify that premium.
That's the core thesis. Absolutely. Whether you're personally curious about the evolving landscape of fintech, or you're actively tracking market trends, or maybe you're simply expanding your knowledge base,
Yeah.
understanding these interconnected factors, the macro, the micro, the strategy, the valuation arguments, it's absolutely crucial for making informed sense of today's dynamic financial environment.
It really is about seeing the nuances behind the headlines, isn't it? Understanding the why behind the numbers.
Exactly.
Absolutely. And as you, our listener, reflect on these insights, here's maybe a provocative thought to consider further on your own.
Okay.
Given SoFi's highly successful strategy, apparently, of integrating all these diverse financial services under one roof to create that powerful flywheel effect,
Yeah.
what other industries out there might genuinely benefit from adopting such a holistic, ecosystem-driven approach?
Interesting question.
And perhaps more importantly, what unique challenges might those industries face if they tried to replicate SoFi's success in building and sustaining that kind of interconnected customer journey? Something to mull over.
Definitely food for thought.
Thanks for joining us on The Deep Dive.
Thanks for having me.
We'll catch you next time.